my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there with the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
And good afternoon. Well, big day is coming next week. You're going to get that big rate cut. Everybody's so excited about it. And I don't get it, because the last thing we need right now is a rate cut. Now, I know rate cuts are good. I get that. And it would be good. The problem with giving a rate cut right now is insane. Are you nuts? Not when we have such a deficit and such a national debt. Giving a rate cut right now, what's only going to happen is very shortly after they cut rates, they got to go back to increasing rates to fight inflation that was created by the rate cut. Ridiculous. I mean, it's just so myopic. They're not fighting the real problem. And what was really interesting is they wanted to rally the market. As soon as they said, hey, we're going to have that rate cut next week, people went nuts. They jumped in and started to buy on the dip all these tech stocks, and they're going to get crushed. They're going to get crushed. I went through these tech stocks today with my members, and I showed them. If we went through every group of the AI group, like the semiconductors, everything that makes up that AI, it's amazing how they're jumped in there and buying, and trends are down. Just take a look at the semiconductors, SMH. SMH, they jumped in, they bought. How ridiculous. You got trend that's going the wrong way. You got volume that's diminishing. You don't buy a stock when volume is diminishing and the trend of money is going down. You don't buy on dips when that happens. That is ridiculous. But their story was, oh man, we're going to have this rate cut. Everything's going to be wonderful. 2026, we're going to have an explosive economy. Jobs, everything's going to be wonderful. On a 25 basis point rate cut, what? This is insane. And if you looked at, if you just looked at the Magnificent Seven, out of that 7 stocks, only 2 stocks, Apple, okay, that's still good, and Google, that's it. All the other stocks are terrible. Example, people jumped in, were buying Microsoft left and right. Look at this garbage. Microsoft, the trend, money flowing out, straight out. And on my chart, my Pro 2 chart, it was every candlestick's red. That's the one bad thing about trading with generic charts. You look on a generic chart, and it'll show your candlesticks are green. Some red, but green. And when people see that, like NVIDIA, here, I'll put up NVIDIA. If you look at NVIDIA, you start seeing green candlesticks starting to come in on November 24th. And then we had 25th, then again another green candlestick in December 1. People think, oh, I should buy. No. If you look at my chart, they're all solid red, because I designed my own charts in 1998, okay, that makes sense. All I care about is money going in, money going out. But going back to the trend problem is the big problem. You got volume going down, trend going down, and you got all these FOMOs jumping in and all these tourists jumping in. I never saw anything like it. You only have a handful of stocks. Again, I went through the AI stocks. The 7 magnificent, you got 2 stocks left. You take the total semis, about 12, 13 semis. There's really only two. Only two you should be buying. But everybody was in there buying a Taiwan semi, even though the trend's down. They're going after Intel. They're going after, I couldn't believe they're buying AMD. AMD. How do you buy AMD when it's under the 50-day moving average and the trend is going down? Anyways, enough of that. So this is just crazy what's going on. Now let's get back to these rate cuts. It's getting everybody excited, okay? And as I said, yesterday, the traders, next week, we're going to get the point cut, the rate cut, and the enthusiasm is insane. They're saying, well, okay, that one cut is going to give us great economic growth for 2026. They're going to lower that rate by 1/4. And we are going to just go bonkers. Everything's going to be fantastic. We're going to have an incredible economic growth, jobs up to yin-yang. I mean, unbelievable. I don't know where they're getting this stuff from. Where do they get that? Now, here's the problem with rate cuts. If, again, we didn't have a $38 trillion national debt, which, get this, every day we are borrowing $6.4 billion in new debt. We put on $6.4 billion in new debt every day. Why? Because Congress won't stop spending. Because Congress spends 40% more than they take in revenue. And that's why they'll never, ever be truthful about being in stagflation, which I believe we are now in stagflation. Anybody that's been around a long time looks at this. What else can you call it? What else can you call it? So, but my point is, why are we paying $6.4 billion in new debt every day? The debt's going up by $6.4 billion. That means the Congress is spending 40% more than it collects annually. It's like $5.2 trillion. I think it spends like $7.2 trillion. It's insane. What are you, nuts? Now, here's the part that nobody gets, and you never hear them talk about. You got to look at our debt to our GDP. What is the ratio? The ratio should be at 68%, no more than 68%. Why is that important? Because when you're at 68%, you can get people to lend you. Who are our major lenders? Japan, China, and UK. And they'll loan to us at a reasonable rate. But when your debt to GDP is at 128%, twice what it should be, they're not loaning to us. They're selling us goods, taking the dollars. They used to go to our auctions, buy our debt, no more. They don't go to the auctions anymore. They take the money and buy gold. Trump has been forced to buy short-term notes. Short-term notes. And he's got to, remember, every year for 4 years, he's got to knock off $7 trillion before they could just borrow it long-term. 30 years, 10 years. Not now. Now it's just short-term notes. 1 month, 2 months, 3 months. That's insane, because our lenders are not going to touch us, because when you have a debt to GDP ratio, that means you are not managing your debt. And do you really think in Congress we're managing our debt? Do you really think the Federal Reserve is doing anything? That's the other thing. The Federal Reserve is a joke. You know, it was a beautiful thing when they started in 1913. When they had, like the Fed has regional banks, right? Well, those regional banks were all owned by the group. And they used to help, most of it was to help out farmers. That's right. But the Federal Reserve was made up of I think back then it was like 8 banks. I forgot what it was, but let's just say 11 banks. But each one of those banks were owned separately. They weren't controlled by Washington. They had nothing to do with Washington. The idea was to take that money, help out the farmers, and then when they have their crops, they go in and cash in, they pay their debt back. It was a good idea. Everything was fine. But then who screwed it up? Roosevelt comes in, and he decides No, I'm going to get control of this bank. I'm going to bring it to Washington. Instead of, let's say there's 11, let's use 5, I think it was 5. But let's just guess, say it was 5 banks. Those 5 banks aren't going to be independent anymore. And they're not going to be outside of Washington. I'm going to get a guy inside Washington, and he's going to be the new chairman of the Federal Reserve. And that's when it all got screwed up, because that's when it became a political animal. That's when, see, before it was totally independent. It was the last person, the loader of last resort. When you couldn't get money, you went there, especially if you're a manufacturer, you're a farmer, no problem. But now, no, where's the money go now? Goes to the friends in Washington. A lot of it went to Nancy Pelosi and her husband so they could go ahead and trade stocks. I'm only making that up, but I wouldn't put it past them. But the point is, what was good was turned into a piece of crap, okay, by the politicians. So this idea that, the Fed's going to cut rates or the Fed's going to raise rate means squat, means nothing, okay? They don't control anything. The Fed doesn't control it. It's controlled by the politicians, by the Congress, by the guys down there who are very powerful. But let's get back to the fact. So our debt to GDP ratio is twice of what it should be. We can't borrow money. We can't borrow money at a good rate. So to say we're going to cut rates is only going to put us in worse shape. You got to understand that. How stupid. We can't borrow at low rates. So, again, our deficit, where we're now, again, spending 40% more than we take in revenue, that's going to go up to 50% or 60% more than we take in. Exactly right. That's what's going to happen when you start cutting rates. I mean, this is terrible. Now, the real problem is this. Think about this. We are paying $200 billion more a month than we should be because we're not good managers of our debt, because our GDP ratio is at 128%. So we're being penalized to have to pay higher interest rates. So we're paying $200 billion a month, but not Congress. They're not paying it. If you become a congressman, you should have to pay 10% of your salary, okay, to bring down the Federal Reserve. That'll prove they're really out for the idea of helping the country. They should have you take 20% of their salary, should go and pay down. Then they'd be a little more cautious. But the problem is right now, that causes this crowding out. When the government needs so much money, when we're in such bad shape and we can't pay our bills, they go and they take all the money from the banks. Now, if you have a small restaurant and you want to expand, you own a restaurant, and it's going to cost you, say, $200,000 to expand, you want 50 more tables. Oh, you can go borrow the money. Oh, they'll give it to you. But what used to be at, let's say, 5% or 6%, you're going to have to pay 10%. Why? Because the money at that bank has been shrunk down. Because the government's taking the money, they need the money. So when there's less money at the bank, rates go up. So the guy who owns a restaurant, he's not going to expand. The manufacturer of life rafts, he's not going to expand. The manufacturer of boat parts, he's not going to expand. So that's why our economy's not growing. That's why our inflation stays at 3%. We can't get down to 2% because of crowding out. So this idea that I can't wait till next week. We're doing a quarter, and it's going to save the world. And boy, watch out for 2026. What a bunch of crap that is. Unbelievable. But one of the reasons that they're really pushing this rate cut, again, is politics. They see the small businesses and private businesses are cutting and cutting and cutting. Remember, labor is your biggest expense. That's the first thing that goes. So we are now losing an average of 2,500 jobs a week with small private companies, the backbone of our nation. So we are losing all these jobs. And so that's why they want to do a rate cut, when they shouldn't be doing a rate cut when we have such a national debt, such deficits. And I mean, sure, we're going to get some rate cuts and things are going to be great for 2 or 3 months, but then inflation goes up. Then all of a sudden, no more. Now you start raising rates and you really made a mess of things. You know, the easiest thing for politicians to warn, let's just go borrow money. It's not my money. I don't have to pay it back. What a bunch of nonsense. And this QT is going to start soon. That's really going to screw things up. So anybody that thinks that they're going to get this rate cut and everything's going to be fine and your tech stocks are going to go back up, you're disappointing yourself. That's not what's going to happen. It's just not what's going to happen. In fact, I will be stunned. They're hoping by cutting the Fed rate 25 basis point, the 10-year Treasury yield will drop below 4%. I don't see that. I see the 10-year Treasury yield going back up. And boy, will that hit everybody hard. That'll be interesting, won't it? Amazing. So, again, that the Federal Reserve, which was a good idea, just give it to a politician, he'll screw it all up. And so that's just a terrible thing. All right, when we get back, we'll take a look at some stocks. Okay, see what's going on in the stock world here. And we'll talk a little bit more about the overall economy, what we should be doing, especially inflation.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Okay, welcome back. So, again, handful of stocks. That's it. Out of all those tech stocks, there's only about 3 or 4 stocks that really are lined up to buy. And this rate cut, people think, well, boy, they cut rates. I'm going to go buy all these tech stocks. I'm going to buy on the dip. You better look at your trend. Any stock, whether it's a tech stock or not, but the tech stocks are where everybody's going to go when they cut rates. Never buy on that dip when your trend is going down. You will lose. But going back to what's going on and how the negative side with this cutting rates is our national debt's too high. That's the problem. So it won't work. It'll work for a little bit, but then rates are going to have to go up because of our debt to GDP ratio is out of hand. It's crazy. Now, the one thing they're never going to admit to you is, remember how they mashed the jobs? They mashed nearly 1 million jobs. Remember under Biden when he was running, and they lied about. I mean, he didn't, because he didn't know what day it was, but his team around him, put in about 900,000 phony jobs. We found that out right after the election. The problem you have is no one uses that BLS. See, that BLS was supposed to be independent. We're supposed to get our numbers from the BLS. They're supposed to be independent, but they're not independent either. We haven't been getting our numbers, but it doesn't matter to me or my gang members. We could care less. We don't need the numbers, because what do? We follow the money. We follow the money. And the chart that I designed in 1998 with more than 225,000 people viewed since then does the job, because it tells me if money is going into my stock or coming out of my stock. That's all I want to know. I don't have to hear all this song and dance and fundamentals. I could care less. Volume, are there more buyers than sellers? I care about that. And that sets up the trend. And my charts show a clear trend. I don't even have to look at candlesticks. I can trade without candlesticks, because our platform is so unique that it will show you that trend and volume. Those two things working together will tell you if you should be buying or you should be shorting. But anyways, getting back to how they're not truthful. The Federal Reserve, again, is rigged. It's all rigged, with Wall Street. The Federal Reserve is not there to help us. It's not being used the way it should have been used. But let's talk about, for example, they're not going to tell us that we're in recession. They're not going to tell us when we're in stagflation. And I was so angry. You remember in 2000, I think it was 2022, we were definitely in a recession. We had 2 quarters back to back. They were negative. And they came out and said, Biden's guy came out and said, oh no, there's no such thing as a recession when we have strong jobs. Now, we found out they were lying about the jobs. They fudged about 1 million jobs, right? But look at the strength of the jobs here. How can you have inflation? Okay, when you a recession, rather. How can you have a recession when you got this kind of depth in jobs? It was a lie. So let's break this down, because here's what's going to happen. We have already been in recession. Most of the recession's been in manufacturing and the labor market, any kind of production. We've been in a recession. Now, let's think about it. What is a recession? Rising prices. We still have rising prices. Yes, some prices have come down, but they're still going up. When they measure inflation, remember, they're only measuring the percentage of the pullback. They're just measuring the percentage of how much it pulled back. That's all. We still have a great deal of pricing that's insane. You go to the grocery store, check it out. But a recession, remember, you get one of those when you have rising prices. Did we ever have rising prices? Do you remember any rising prices? Okay, all right. How about unemployment? Are you kidding me? Just look at the JOLTS number. The JOLTS number dropped from 10 million to 7 million. So let's check that box off, okay? And how about slow economic growth? Are you kidding me? We are in slow economic growth. We've been in a slow economic growth. It's like watching paint dry. That's recession. But they didn't tell us that, okay? Well, how do you get caught into stagflation? That's the real bad one. That's the mother of lows. That's what destroys households and small businesses, which is the backbone of our nation. It's the most feared thing out there when it comes to the economy, stagflation. Well, let's check that out. Let's check the boxes off. Did we have rising prices? Yeah, check that. How about rising unemployment? Yeah, check that. How about our economic growth? Has it been slow? Absolutely, check that. Well, wait a minute. That's the same as recession, so they're the same. No, there's a difference. The difference is, unlike a recession, okay, where inflation drops when the economy slows, that doesn't happen. When that doesn't happen, in other words, when you have a recession, inflation will drop when the economy slows. When people get laid off, people don't spend as much, the economy goes down, and people aren't spending, not borrowing as much, inflation drops. Oh, it's the same thing with stagflation, but there's one big difference. When we have, again, the economy slowing, why does the inflation remain? So both stagflation and both recessions have the same problems, same components: rising prices, rising unemployment, slow economic growth. But recession, when slow economic growth, inflation goes down. Well, why doesn't it go down on stagflation? Well, now you got to look to Congress. You got to look to Washington, because they screwed up. They screwed up. Because, again, it's monetary policies, terrible monetary policies put in place by Congress, who controls power. That's the difference. So what happens is, when we have these terrible monetary prices, where all of a sudden oil's starting to go back up, commodity prices are going back up, that drives up inflation without economic growth. So stagflation and recession's exactly the same. The only difference is, what's goofy is that when you have stagflation, you still have high inflation, even though the economy has slowed. And the reason is, you go back and look at the policies in Washington, they're screwed up. And that's what makes the difference between stagflation and, again, recession. They're all the same, except for stagflation, your inflation remains high even though your economy has slowed. The difference is the policies. And those policies cause that, the monetary policies that boost, all of a sudden, your commodity prices. You notice oil prices are going back up? They're starting to go back up. So that's, and when you have the inflation staying up with your economy weak, instead of going down, your economy is weak, and that means you have no economic growth. You got to have a corresponding economic growth with it. There's not. So that's the fear. That's what we're going into. Now, why is that so bad?
5 minutes.
Because you can't fix stagflation. You fix recessions by simply cutting rates. Once your economy starts going down and everything's slow and labor's getting cut, then you go and cut rates to stimulate the economy. Well, you can't stimulate the economy with stagflation. It doesn't work. It's too difficult. Why? Because Washington won't do what it takes. Washington, when there is stagflation, where the economy's going down, but inflation is staying up, well, wait a minute, recessions, the economy's going down too, but their inflation came down. Why isn't my inflation come down if I missed their stagflation? How come mine's not going down? Because you people in Washington, you politics, screwed up the Fed. You screwed up the policies. And the policies, okay, when you have bad policies, now you're screwed. So, but everything's the same. Now, the only way you can get rid of the stagflation is stagflation kills households, nothing worse than stagflation, kills jobs, nothing worse. But Washington won't do what they're supposed to do to remedy stagflation. This is why it's so dreaded, because Congress must stop spending more than the revenues they collect. They won't do that. They'll keep borrowing $4 billion more than they should every 24 hours. And they'll continue increasing the money supply, which creates inflation when they shouldn't. Because see, Washington, the congressmen won't do what is right for the nation. They only do what's right for the power. The power. Now, what happens is Congress will never cut spending due to the rigged budget process. They rigged the budget process. When they sit down and do the budget, they'll rig it in favor of increasing the size of government. I don't care if they're Republican. I don't care if they're Democrat. They all want to do the same thing. They want to increase the size of government so they can go back home and build a new airport, an extension on the airport, or build an ice skating rink, or build who knows what the hell they want to build, no ballpark. That's the problem. So we are in stagflation, not the whole economy, but certain parts is in stagflation, like our manufacturing, our banking. But they won't fix it because they will never, never stop rigging. Congress will never cut spending, never. And they'll always rig the budget deficits, budget process. You know how they say, well, we cut $25 million, but what they did is this here. They didn't cut squat. What they did is, let's say they had $25 million. They'll raise it to $35 million. Then they'll say, okay, we're going to cut $10 million. Look at that. We cut $10 million out of the budget. No, they didn't. They raised it from 25 to 35. They raised it $10 million. They're just taking it back. They should take and cut $10 million from $25 million, so they only have 10. They only have $15 million left.
1 minute.
They don't do that. Okay, let's get back to. I'm running out of time, but the only stocks you got to start watching right now, okay, is any stock that has relative strength. Like right now, gold has relative strength. And as long as the trend keeps going up on our GDX and our GLD and our POS, see how the trend's going up? You can see how our stochastic trend is going up and the stock's going up. That's what you got to stay with. GLD, trend's going up. If you look at energy, XOP, trend's going up. XLE, only a few stocks are doing this. And all your brokers and the people who are in charge, who are supposed to be helping you, they're putting you in the wrong stocks. They're getting you to, because they know they can sell you easy by saying, buy on a dip. Remember they did that to you on when, what was it, Enron. They had everybody buying on the dip. Everybody lost their money. All right, that's it for today. So watch your trend. See you on the chart. Join the gang. Phil. Grande.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.